Hello guys, welcome back to another new YouTube video. So in this episode guys, I want to show you how we swing trade in the market. So I want to show you how I was able to not make these big numbers. As you can see, we have $4,000 running. So I flipped a 5k account, I doubled it. I doubled this account guys. So most of you guys know me, I'm a swing trader, so I'm going to be showing you how I do it, how I analyze the structures and all that guys. But before that, thank you for the 2,000 subscribers guys. As you can see, we're hitting big numbers. This channel is reaching more and more people guys, so make sure to subscribe, share with all your friends, and let's get started with this video guys. I'm using the XNES broker. If you want to sign up with XNES, check the link in my bio. So as you can see, I'm trading the EURUSD. The EURUSD is the most traded currency in the forex market. So as you can see, I chose just a few currencies to trade because, you know, these are the GBP is the third most traded currency, then the euro is the first, no, the euro is the second, no, the euro is the third, then the USD is the first. Yeah, so the USD is the first actually, the euro is the second, then Japanese yen is the third, and the GBP is also there. So these are the most traded currencies. So these are the pairs now. As you know, we trade currency pairs. So when we come to the EURUSD, so this is where I took trades. So if I zoom out like this, you will see definitely here, this is where I took trades down here. You see down here. So I'm going to be explaining step by step on how I was able to do this. So most of you guys, when I'm explaining to you, most of my videos, you hear me talking about looking for structures. When you are trading the forex market, we love to look for structures on the bigger time frames. You can't look for structures on smaller time frames because we shall have our target, peep target will just be small if you are looking for structures on 1 hour time frames. But so this is EURUSD. So as you know me, I don't trade so many currencies. I love to monitor. So if I'm trading only a few currencies, I'm going to be able to monitor them, all of them. So this is my EURUSD. So when I come to the monthly time frame, so this is what I best want to take these trades guys. So I want you to be very keen. Look here. So this is my EURUSD monthly time frame. You can see the monthly time frame. So look where I took the trades down here, like at the extreme down. The reason I took trades here, this is a very good zone, or a strong zone. You see, the last time market was here, this was in 2016. 2016. This is the last time this market came down to this level, and you know what happened? Market came back to the same level. The reason why I was able to monitor this because I trade only a few currencies, so I know where each market will reach. So you see, market came back after I don't know how many years. Let's see, 2016, 2017, 2018, 2019, almost after 6 years. This is when the market came back here. Actually, this is after 8 years, no, 7 years. The market came back to the same level. So what comes to my mind? We have to look for buys, but we don't look for the buys on the bigger time frame. So we have to increase the time frame. I mean, we have to go into the smaller time frame, and then we start looking for entries and all that. But also we need to find confirmations. By the first sign, you look again here. Price was here in 2016 around here. The price is back here again in 2021. No, this is 2022. So guys, here we go to the daily time frame. From there we go to the daily time frame. So now this is my daily time frame here, right here. This is my daily time frame. So this is what we had. This is what we had. You see, a smooth downtrend, and then now market reached our zone. So when market reached this zone, in my head, in the monthly time frame, market has reached its monthly low. Market has reached its monthly low. So we come back to the monthly time frame. Remember, monthly low. The last time it was here, this is 7 years back. So, and I think by in 2015 I didn't even know about forex the time market came back here. But now after 7 years, market comes back to the same zone. I know about forex. So we go to the daily time frame. So on my daily time frame, I took trades down here. But I'm going to show you some of the things I based on to take these trades. So the first thing, I wanted to see a reversal. I wanted a reversal confirmation. So one of the first things I use is divergence. So divergence is let me first choose. So to be able to use the divergence, you need to have an indicator called the oscillator. So you just tap anywhere on the screen like this, tap indicator, then come here, tap main window. So we want to look for the oscillator. So this is the oscillator right here, down here. So I'm going to add this. I'll leave these on I'm going to leave these on the default settings. So this is my awesome oscillator. So this, see what we have here, this is the awesome oscillator. So remember, we are looking for a reversal. Since market had reached its monthly low, we wanted to see a reversal so that market starts going back up. So one of my the reversals I need is just a divergence. So we have this extended divergence. So divergence is when we have this market sloping, having this slope down here, and then we have this upper thing market, we have this market going up here like this. You see this? So let me draw it out for you. So you tap here, choose this. So this is what we call divergence, but this is extended divergence. So this is extended divergence. So that's what we have on our market. Then we have this. This is what we have. So this is what we call divergence. This is what we call divergence. You see there? That's divergence right here. You see? Again, since this is a big time frame, then we also, I love to look for even more divergence. Look now, look here. When market is about to reverse. Now this is even more clear. Now this is the divergence I'm looking for. That one was extended. So you see what we have here? We have market dropping down, and on my divergence we have price coming up like this. You see, price coming up here. So this is a reversal confirmation. But again, as I told you, we go into the smaller time frame again, now 4 hour time frame. So still my main thing is divergence. So now this is where the major divergence comes in. Look here, my line is still here. So I draw it out very neatly like this, then choose my trend line. So this is now divergence. Whenever I see this on the market, I know it's time for me to enter for buys. Sometimes they can be long-term buys, sometimes they can just be short-term buys. So this is what we have, divergence, and market side going back up. You get? So guys, I took trades down here. So my first trades, I took them after we had after we had this you see these small red candles are in there, something like a doji. Yeah, so the doji represents indecision in the market, but now since we know market has to go in an uptrend, I jumped in there, took one trade there, then took the other trade when I received this green doji. You see this doji, and I took another trade. Then I took even more trades because I knew now there are no sellers left in the market right here. I took most trades, and guess what? We had market jumping to the upside very fast. You see, guys, I'm still on to the confirmation for so the other thing, guys, when we come on to the big time frame, the daily time frame, to make this uptrend solid, I need these two moving averages to cross. I need these two moving averages to cross here. You get? I want the blue EMA. So I'm using the moving averages I'm using here is the blue EMA, which is 21, and the 50 EMA, which is green. So EMA stands for exponential moving average. It stands for exponential moving average, which so it reacts fast to price changes. So this is what I want here. I want this to cross so like I'll know that this is a solid uptrend. But remember, we have confirmation that price has reached its monthly low. So my target on these trades is just to at least grab at least 500 pips or and plus. So right now I'm currently floating 300 pips. As you can see, 0.10 it gives us $1 per pip. So meaning if it's $1 per pip, here we have 311. So those are already 300 pips, guys. But remember, we need to have very many confirmations. So apart from the divergence, remember I use the RSI. The RSI is one of my favorite indicators to use. I need to see momentum. So same thing, just tap anywhere on the screen like this. Tap anywhere on the screen, come here, search for the RSI. RSI stands for Relative Strength Index. So these are my settings. You can screenshot them, and then yeah. So this is what we have, guys. So when I zoom into my daily time frame, as you can see, let's go for the 4 hour time frame. Yeah, the daily time frame, yes. So the time where I took trade This is the time I took trade, guys. You see, market was ranging below my 50 EMA, but now when price crossed like this, you know, when price crosses the 50, not the 50 EMA, but the 50 level on the RSI, this stands for more momentum for the buyers. It means buyers have more momentum. Again, here we can see price has kind of retested. I mean, it has kind of retraced on our level here, this level here. So remember what we have here. Look, price is also retesting at the 50 level to just keep on going back up. So my goal there is just a few more pips, just a few more pips until until I take my positions. I close my trades, but all I want is just a few more pips, guys. But remember, this is the Euro USD. You can see this is the 1 hour time from this, how my chart looks like. You see, we had a very good reversal, guys. This was a very good reversal. This is the Euro USD. This is the most traded currency. You see, this is the most traded currency. We quote market from down here. So I'm also going to show you the GBP USD. I took some trades off this, but I closed them. But also I'm going to show you the same thing. You see, when we come to the monthly time frame, look at this, guys. Last time market was on at the same level. This was in 2000. This was 2019. You see, market came back to the same level after I don't know how many years. These are just like 3 years. Yeah, market came back to the same level. This is after 2 years. Yeah, market came back to the same level. 2019, I was just learning about forex. From 2018, I was learning about forex. Then market comes back to the same level on the monthly time frame. So the meaning, this is a monthly low. So here we look for buy setups only. Buy setups. As long as we don't see signs of market keep on going down. So we just want to see buy setups, and these have to be long-term buys, guys. But remember, we need to look for confirmations on all time frames. You see, all time frames. So one of my confirmations that I told you, I want to see divergence. So you can even see we have divergence here. We have divergence. You see, we have divergence. We have divergence. Let me first delete out these here. So if I draw you can even draw divergence on the RSI, just like this. See, so you see, I have this coming down on the market and have this going up on the market. You see, that's my divergence. So even though we select another currency, let's say AUD USD, we check its monthly low. When we check its monthly low, it didn't reach like its monthly low, but this has to be a weekly low where market was. But again, we just want to see buys. We want to see buys for these markets, but mostly this is true Euro USD and GBP USD. The Euro USD and GBP USD, guys, as you can see, market reached its monthly low. This is why I took my trades. So guys, you need to have a lot of confirmations, and the easiest way to trade is just knowing, okay, this is now a monthly low, this is a monthly high. So imagine if market comes back to the same levels here, we would be looking for sells. Because these are monthly lows and monthly highs. So if you're a trader and you want an easy way to trade in the forex market, just look out for these, the lows and highs. This is very easy. As you know, guys, even I told you about these simple strategies on my channels. I'm always telling you, I learned forex the hard way, and I also learned it the simpler way. But I don't want you guys to learn it the hard way, because it's more stressing. The reason I made this YouTube channel for you guys to learn forex the simpler way. So I'm dedicating all these videos, for you guys to learn and be able to, make these big numbers. You see, and one of the ways you can play with big numbers, you can get a funded account, guys. I'm going to leave a link to my forex funds profile. You can get an account with them and get funded. You play with big numbers. So like a $5,000 account on my forex funds, it would cost you something like $50 only. Just pass the challenge and start making crazy amounts, guys. But remember to stay disciplined in the market. Don't let the market discipline you. We don't want to control this market. We just want to control our risk management. And when you can control your risk management, you can make money. And the reason why you can't control this market, because this market has a liquidity of $6.6 trillion, and 85% of that is being controlled by the bank. So meaning we traders can't control the market. We can only control our risk management. you know. So guys, I hope you enjoyed this video about my EURUSD analysis that I made, and I took trades, guys. You know, yeah, I'll see you in my next video, guys. I'm going to be bringing more videos, and I'm also going to be making videos where I'll have a certain small number here. I'll have like $20, $30 and no trades. Then I'll be trading it live, you know, so that you can see my entries and all that. So I'll be showing you the process and, you know, how the market plays out and all that, guys. So I hope you liked this video, and, you know, hit the notification bell, share with all your friends, guys. I'll see you in my next video.